Good morning, good afternoon, good evening from wherever you're watching me from. Welcome back to the channel, everybody. This is Ed Owens, your trainer for this entire series. Thank you for returning to this channel. I hope you are all doing well with the last strategy I taught you. I taught you the last strategy in my last video. If you are watching this video but you've not watched the previous strategy video, please go back and do so because this video is a build up on the previous video. But if you have watched already but you've not paid attention, you've not learned it thoroughly, please go back and do so, okay? Because whatever you are going to discuss in this video is going to be an add-on to that particular video. In this lecture video, I will be teaching you 3 best entry techniques to use as a day trader. So open your ears, open your eyes and watch me, okay? Let's get started, okay? In the previous video, I taught you one of my bread and butter day trading strategy. Remember? Remember the rules of the strategy? The breakout continuation trading strategy, do you remember? So for the sake of the new guys who are here today, let's do a recap. The breakout and continuation strategy is based on trend. You are a trend follower. So what you have to do is that you search for a trend. And then what defines a trend? We learned that trend is defined by higher highs and higher lows, right? That's what we define a trend. We also learned that it's not only this way that trend moves. Trend can also move higher high, retrace, and break out of retracement, come back, and gives a lower low and continue with the trend. So these are the 2 ways trend moves. That's what I discussed in the previous video. And we discussed that the breakout continuation trading strategy, what do you have to look for? You first have to look for a trending market, a market which is trending. Look for a market which is trending already. So like in this particular chart, for instance, this is pound AUD chart. Can you see? Pound AUD chart. On which time frame? We are on the H1 time frame. So this strategy can be traded on the H1, on the H4, and on the M15 minimum. Okay. So we are on the H1 time frame. And what are the entry rules? First, make sure that the market is trending. So first, you identify a trending market. And what is a trending market? A trending market is such that all the moving averages are sloping upwards, okay, or downwards. So we learned that this is my 18 EMA, this is my 50 EMA, and this is my 200 EMA. Can you see, guys? 18, 50, and 200 EMA. This is what I discussed in the previous video. So if you have not plotted them yet, you must plot them on your chart. So these are moving averages: 18 moving average, 50 moving average, and 200 moving average. What do you use these moving averages to do? Do they tell us when to buy and when to sell? No. I discussed that moving averages are just there to identify the trend for you. They help you to identify the trends. They're not there to teach you when to buy or when to sell. Indicators themselves do not have the capability to tell you when to buy and when to sell. All indicators are to guide you and aid you in your decision making. I keep saying this, but people still keep getting it wrong. Indicators are there. Every indicator you see, they are there just to aid the decision making, but don't tell you when to buy. They don't tell you when to sell. They just help you and guide you and give you specific information based on how the indicator was programmed. So the indicators I use here are the 18 EMA, the 50 EMA, and the 200 moving average. Plot these indicators on your chart, and then it helps you to identify the trend of the market. So now, when the indicators are all sloping upwards, 18, 50, and 200, they are all in sequence, then you notice that the market is in an uptrend, okay? So when you wake up in the morning, search for a market with this same pattern, either forex or the forex pairs, okay? I don't trade this strategy with indices. I have different strategies I trade with indices. This one is just for all the forex pairs. So you search for a forex pair which is trending, okay? A forex pair which is trending. So in the strategy, I taught you that you look for a trending market, and then you search for consolidation area. Have you seen? And when this market breaks out of the consolidation, you wait for the market to retrace back and give you bullish engulfing pattern. And then you take the market, you enter here, you put your stop loss behind the structure, and you ride the market up. You can take your stop loss 1:2, or whatever your stop loss is, just take it. But make sure you always take 1:2 of your account, okay? You risk 1 to make 2. So we also discussed that at this particular moment, after you've taken this trade, you could have also taken a trade here. See, support, 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 and there was a breakout. market retraced, gave you bullish engulfing pattern here, and ride the market up. Do you remember, guys? So that's it here. It's very clear now. I've cleared the pencils. So support, support, support. Can you see? And there was a breakout. That's a strategy. When there's a breakout, what do you look for? Bullish engulfing pattern, right? Then you ride the market up. That's what we learned in our previous video. So anyone who is watching me today and you've not watched the previous video, please go and watch it, because those are the same things you are going to discuss here. In this video, I'm going to teach you some best entry techniques you can use as a day trader. But before that, you must understand what actually you are trading. Another example we also looked for was this NZD card chart. This is M15. I told you can trade a strategy on M15, H1 and H4. I don't normally prefer to trade on H4 unless once in a while, but I don't like trading H4. H4 is for swing traders, and anytime I enter a trade on H4, it can take like 2 days, 3 days before the trade gets executed. Okay, before the trade gets completed. So me as a day trader, I just focus on M15 and H1 chart. So that's what all we'll be doing on the channel: M15 on an H1 chart. Okay, so this is the chart we also look at. We discussed that before you can take this entry, right? Before you can take this breakout continuation strategy, what do you have to look for? A trending market, right? Market which is trending down. This one I have zoomed in the chart, so you don't see the trend wall, but you can see that the moving average is trending. The price is below the moving average. So here you can see support, 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 and breakout. So what are you looking for? You're looking for the market to retrace back to the support area, gives you a confirmation of bullish engulfing pattern, and you take the market down. This is our strategy, guys. This is a strategy I taught you the other time. Let's see another example, one more example before we continue. We also discussed this particular chart. This is pound card, and on which time frame? See, M15 time frame. Can you see, guys? We also discussed this chart, and we realized that the market was on a downtrend, right? Before you can take this strategy, the market must be on a downtrend or uptrend. The market must be trending. Market is on a downtrend. Now we have support, 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 and there was a breakout. Can you see? Market retrace gives you bearish engulfing pattern. Where is the bearish engulfing pattern? Here? No, it's not here. The bearish engulfing pattern is here. Can you see? This candle, this is a morning star pattern, and this is the big bearish candle. Can you see, guys? So this is where you have to enter. So this is the chart we discussed. So now you understand the strategy. Let's go on to the best entry techniques. How are you going to enter with this strategy? There are 3 ways you can enter, okay? There are 3 ways you can enter with this strategy. The first way you enter a market is called the ambush method. When you say ambush, what does it mean? It means you're going aggressive, okay? Aggressive means that you don't wait for a confirmation to form. So after you identify that the pattern is ready, support, 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 and there's a breakout, when the market retraces back to the support line, you don't wait for any confirmation. Just enter your trade here and take the market down. It's called ambush. Ambush means you're going very aggressive. You don't wait for any confirmation. So what is the advantage and the disadvantage of this particular entry strategy? When you go ambush, one advantage is that because you enter early, your stop loss can be very small and you can take bigger profits. That's one advantage. Your stop loss can be very small, you can take bigger profit because you don't wait for any kind of confirmation. The moment the market comes back to a zone where you want to buy, you just enter, you buy or sell straightforward because your strategy is ready. So you see support, 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 breakout, and when the market just retraces to that particular area, you just enter your trade straightforward. That's ambush. The disadvantage of this particular technique is that when you go ambush and the market does not reverse, sometimes the market will just go and continue. It will continue and change the trend. So if the market does not reverse, which means it's likely you're going to have a losing trade. So advantage is that you get bigger profits. Disadvantage is that if the market does not reverse and it goes, because you don't wait for any confirmation, you just normally get a losing trade. So let's recap one more. You must first identify a trend, right? Then you search for consolidated area. Maybe this is a trend. Search for resistance area, and there's a breakout, and then when the market comes back to the resistance area, you take your trade here. And I said that to go ambush, there are advantages and there are disadvantages. The advantage is that when you go ambush, when you enter with ambush, which means you don't wait for any confirmation. With ambush method, you don't wait for any confirmation. You just wait. When the market just retraces to the zone, you just enter your sell, and then you are down. And what makes it very advantageous is because you can take larger profit because you enter early. You can take larger profits, and then your stop loss will be very small. Okay, So this is a technique that if you like, you can choose. The disadvantage is that if the market does not reverse, because it's not wait for confirmation, sometimes the market will not reverse and continue and then hit your stop loss and you're out. But most of the time it's going to reverse down though. But if it doesn't reverse, that's a disadvantage. You get stop out. Okay. The next entry technique is the candle confirmation technique. So with the candle confirmation entry techniques, what do? You have to wait for a candle formation, like the bearish engulfing pattern or bullish engulfing pattern. Some candle formation to tell you that the market is actually reversing at that particular moment. So let's see on this particular same chart. If you are going ambush, where will you go? You just put our sell limit here, right? So the market will just enter, trigger our sell limit, and we are down, right? But if you are using the candle confirmation technique, we have to wait. We sit down as day traders, we wait for a pattern to form. Can you see this is a bearish engulfing pattern? You will see this, you see a morning star, and you see a bearish pattern. So this three confirmation tells you that okay, now the market is reversing at that particular point. So where are you actually going to enter your trade? You enter when this candle closes. The close of this candle, that's why you enter your trade. The moment the candle closes, you see the pattern formed. This is a pattern. You see the pattern formed, you enter your trade and you take the market down. So let's recap once more. First, you can enter using what? Ambush technique, where you don't wait for any confirmation, right? You just enter the moment the market gets to your zone, just enter. What are the advantages and what are the disadvantages? The advantage is that because you enter fast, you can take more profit and you can take small stop loss. If your stop loss gets hit, you can get small stop loss and then can take more profit, right? And the second one is waiting for candle confirmation, where you sit down patiently, you wait for a candle pattern to form for you to know that okay, this is actually the area where the market is reversing. So this is where I want to actually enter the trade. So when do you enter? You enter when this candle closes. Most people, their problem is when to buy and when to sell, the actual time. So these are the techniques that I'm teaching you. After your strategy is ready, first make sure your strategy is ready. What is the strategy? Breakout continuation pattern, right? So support, 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 support. Now your strategy is ready. Breakout. So you keep waiting. After the breakout, your strategy is ready. Now what are you waiting for? You wait for the market to retrace back to the zone and you just use ambush to enter and take the market down, or you wait patiently for a candle confirmation to form and then you enter here and you take the market down. Guys, do you understand? The third way you can enter in this particular trading pattern is using discount method. What is discount? Discount is when you go to a shop, right? And the price is maybe $500. They are selling $500 worth of clothes. And you ask for a discount. Discount means you are asking for a reduction in price. So maybe you are asking for $400. You want to pay $400, right? Which is $100 discount, right? That's a discount. Maybe you want to buy whatever. You want to buy a guitar. The guitar is $200, right? $200. And you ask for discount. So you want to pay $175. That is a discount. So in this same methodology, you can use them in trading. In trading, you can also ask for a discount. How do you ask for discount? You ask for discount after your strategy is ready. So either you are trading the ambush or you are trading the candle confirmation, you can still ask for discount. So you can be a trader, okay, I'm always going to wait, ask for discount. So for instance, let's say you're going ambush. If you're going ambush, where will you put your sell limit order? You put your sell limit order here, right? So when the market gets here, it triggers you and then you are down. Or if you're asking for discount, then you wait for the market to come up a little, okay? Because you're asking for more discount, you want the price to come down more so that you can buy into it and then you take more profit. That's a discount. Or if you're using the candle confirmation, you will still wait for the candle confirmation pattern to form, but you won't buy immediately, you won't sell immediately then. You wait for a discount market to come up a little and then you enter the trade. That's a discount trading, okay? So let's recap again. You can enter using ambush technique, where you just enter when the market gets to a place where you desire to enter your trade setup, or you can wait for candlestick confirmation pattern, or you can do discount trading, okay? Discount trading, you always wait. So let's see, Kofi want to buy this particular forex pair. Kofi want to buy this particular forex pair, and the price is here. This is where he want to go ambush. He's an ambush trader. He want to go ambush. You say, okay, today I want to go for more discount, so I'll wait. When the market gets here, then I'll enter. So I'll take the market down. That's what Kofi will do. Or let's say Kofi is a pattern trader. He want to wait for candlestick formation. So after the candlestick is formed, where will he enter? He will still wait a while for the market to come up a little and then take the market down. Why will he do that? So that you get more discount. Okay, you get more profit and a little stop loss. That is discount trading. So what are the disadvantages of discount trading? In discount trading, sometimes if you wait, let's assume you are an ambush trader, you are supposed to enter here for the market to trigger you in, right? And you did not enter, you were waiting. So if you wait some time, the market will not come to your zone and then you miss the trade. That is the disadvantage of discount trading. If you don't take it, the market will not come to your zone and you miss the trade. So let's see this particular pattern. See, assuming Kofi want to take this candlestick pattern, right? He's waiting for a discount. He said, okay, I'm waiting for the price to come up here somewhere, then I'll enter the trade. Did the price get there? See, it nearly got there, but it didn't, and it reversed. Look at the bearishness in it. And Kofi lost this particular trade, and Kofi will be crying, right? So that's a disadvantage of discount trading. But the advantage is that you can take more profit. So let's say you are Kelvin. Kelvin decided to enter the trade here, and Kofi decided to wait a little. Kofi's stop loss is very small and bigger profit, right? Kelvin takes the normal profit and the normal stop loss, but Kofi will get more bigger profit than Kelvin. That is discount trading, guys. So now that you understand the three entry techniques, let's see more examples of these entry techniques on different charts, okay? Okay, so this is an NZD USD chart. Can you see? And which time frame are we on? We are on a 15 minutes time frame. Can you see? M15 time frame. And this is actually a trade I took today, but for the recording purpose, I just said to take a screenshot to show you. I entered here. Can you see? Entered at this zone, and then my take profit target is here. Can you see the line? Take profit target line is here, and my stop loss line was also here. So first, what do you look for? We are trading what? Breakout continuation pattern, right? So you look for the market going downwards, right? You look for a downward trend or upward trend, but the market must be trending, either trending upwards or trending downwards. Then secondly, what do you look for? What is the second criteria? Look for support, 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 and breakout. When market breakout, what do you search for? Search for retracement to that particular zone. But here, I do not see any better pattern here. Me, I always wait for candlestick confirmation, okay? I don't see any better pattern as I waited. The market broke out again, and I can see other support, support, support here. Can you see? So the market broke out again, and I waited. It gave me bearish engulfing pattern. Can you see? Bearish engulfing pattern. And then what did I do? I did not enter just on this engulfing pattern. I waited for a discount. So today I traded like a discount trader. So I waited for a discount here, and then I took the market down. So when we were just about to hit my stop loss, and I just snapped this screenshot, okay? So you first have to look for a trending market, okay? Trending market, and then look for support, 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 breakout, retrace. If you are going ambush, where will you enter on this particular trade? If you are going ambush, if you decide to be an ambush trader, where will you enter? You put your sell limit here. Instead of waiting for candlestick confirmation, then when the market just returns back, you enter the trade and you take it down. So you would have entered before me, right? But I am a pattern trader. I was waiting for candlestick formation. And when the candlestick formed, I realized that it was too big. It was too big for me because my stop loss was very big. So I decided to wait a while. So today I traded as what? A discount trader. I waited and then I entered my trade here. I placed my sell limit here. So when market came back, it triggered my sell limit, and then I was in profit. It nearly hit my take profit target, and I snapped it just to show you. Because when it hit the take profit target, I will not be around to just show you. So I just snap it just to show you for this presentation for today. But assuming I decided to wait for candlestick confirmation as I always do and trade the candlestick confirmation, where would I have entered? I would have entered here, right? Here. I would have entered here and take the market down. I wouldn't have known how far the market would go though, but this would have been the entry for the pattern trader. The guy who always wait for the confirmation, like as I always do, I would have entered here. But because the candlestick was very big, I had to wait for a small discount. You see, so as a day trader, you have to decide, look at the market. After your strategy is ready, after you get your support, breakout, you have to decide, okay, this particular market, am I going to enter ambush? Am I going to wait for a pattern? Or after the pattern forms, am I going to wait for a discount? I'm going to take the trade. What could have happened here? Here, waiting for the discount, I could have lost or made the trade, right? Assuming I placed my sell limit here, and then the market did not come back, but it continued, I would have made the trade. Guys, do you understand? I would have made the trade. So those are the disadvantages of waiting for discount. So the best way is when the pattern is just formed, you just enter your trade and then you ride the market down, okay? But I was waiting for more discount so that my stop loss will be more smaller because of this particular pattern. I didn't feel comfortable with this particular pattern because the market did not give me any engulfing pattern here. So I waited and then it gave me engulfing pattern here, okay? So you can go for ambush. So the guy who went for ambush, assuming this strategy I taught you yesterday, you were using it today, and then you were going for ambush, you would have entered here. Support, 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 support here. You can see there's a support here. Breakout. So the ambush trader would have entered even before me because I was waiting for confirmation and then there was no confirmation. So the ambush trader would have entered this market and ride the market down with small stop loss. Whilst I waited for confirmation and then there was no confirmation. But yes, still, I got my confirmation, and after I got my confirmation, I was still waiting for discount, guys. I was still waiting for discount. Okay, so you can trade in different stuff, but you must know what actually we are doing as a day trader. Okay, don't just trade anyhow. You must have a strategy. You must have a way you trade. You must have your own skills. Okay, your own skills you use to trade to become a profitable trader. Do you understand, guys? Okay, guys, this is another example of a trade I took, but this particular strategy was not the breakout continuation strategy. This is one of my retracement strategy I use. I'll teach you later in this series, okay? But look at, I just want to teach you how I entered the trade. See, my strategy was that I was waiting for the market to retrace to a particular level, Fibonacci level. And after I waited, I saw bullish confirmation. Can you see? But I can see I did not enter here. I could have entered here, right? Could have entered here and ride the market up, but I did not enter here. Assuming I was going ambush, using the ambush style, where would I have entered? The moment the market got here, I would have entered here. Before even this pin bar was formed, I would have entered here fast. And what are the disadvantages of that particular strategy? The disadvantage is that when the market continues to go down, you don't wait for any confirmation, you can easily get stop out, okay? So I waited for confirmation pattern, and then even after the confirmation pattern, I realized that the pattern was too long. My stop loss would be too big, so I waited and placed my order here. Can you see? I placed my order here, placed my stop loss here, so it came down, triggered my order, and it was just about to take profit, and then I snapped just to show you. So guys, this strategy applies to any strategy you are trading. These entry techniques, they apply anywhere you are trading. You can trade as an ambush entry, can enter waiting for candlestick confirmation, or you can wait for discount. Let's analyze one more chart and then we end this series, okay? Okay, this is also a trade I took with the same strategy I was talking about. I will teach you in this series, so don't worry. So where will you enter? You have to enter somewhere here, right? You wait for retracement. It was the same breakout, but this one it is hidden. The breakout couldn't show. It was like support, and there was a breakout here, but the currency strength meter is blocking it, so you can't see it. Breakout, I was waiting for retracement at that zone to give me a bearish engulfing pattern. So it gave me bearish engulfing pattern here. Can you see? But I did not see. After that time I was out. I didn't see. So I placed my order somewhere here, and it triggered my order on my order chart. So here is where my entry was, and here is where my stop loss was. So you wait for confirmation. Assuming you are waiting for confirmation, you would have entered here. After this candle formed, you would have entered here, okay? Because you're waiting for confirmation. This is what? An evening star pattern. Can you see? These patterns happen almost every time on the forex pairs. So you'd have entered here. Assuming you are going ambush, you'd have just entered here. Assuming you are waiting for confirmation, you'd have entered here. Assuming you're waiting for discount, you'd have waited a little for the price to come up a little, trigger you, and now take you down. Okay? So guys, we've learned a lot in this particular short video. So let's recap. Remember, we have learned 3 entry techniques that you can use as a day trader. The first entry technique is what? Going ambush. Ambush means you don't wait for any confirmation. When your strategy is ready, like for instance, trending, breakouts. So your strategy is ready. You keep waiting. You wait for the market to retrace back, and quickly you enter the trade here without any confirmation and you take the market down. That is ambush. Or when your strategy is ready, trending, breakout, and then you wait for confirmation before you enter the trade. That's number 2. That is waiting for candlestick confirmation. And the third way to enter a trade is what? Waiting for a discount. You wait for the price to come up a little. You put your buy order anywhere you like, and then you ride the market down. And they all have disadvantages and advantages, as I explained to you. If you're going for ambush, it could be that the disadvantage is that the market will not reverse because you don't wait for any pattern and the market will continue up, change the direction, and then you're out of the trade. It will stop you out. Or if you are waiting for a pattern trader, if you are a pattern trader waiting for a pattern, though you can also enter, but you're going to enter late because you have to wait, sit down and wait for the market to form a pattern before you enter the trade. If you are a discount trader, the market can leave you behind, right? You put your limit order here, the market did not trigger it, it came all the way and then leave you behind, and then it moves on without you. But they also have their advantages. The advantage is that if you are an ambush trader, you'll be able to get more profit, right? Because you just enter here, you take more profit. If you are a pattern trader, you enter somewhere here, you will take more profit though, but it's not as big as the ambush trader. And you're also somebody who always waits for a discount, you take more profit just like the ambush trader, just that sometimes you can also miss the trade. Okay, so you can choose any of these styles. For me, as a day trader trading for about 5 years now, I just trade most of the pattern I've taught you now. And anytime I look at the chart, I ask myself, okay, should I wait? From what I'm seeing, should I wait for a candlestick confirmation, or should I go ambush? And even when the candlestick confirmation formed, should I wait for a discount? So you have to decide as a day trader. Okay, so that will be all for this particular video, and I hope you've learned a lot. Please practice after this video. I'll urge you to watch this video over and over again. Practice, and you become perfect. Okay, you can also become profitable trader, and you feed yourself and your family. So please, I'll end here and see you in the next lecture. Okay.